Hey, my name's Jake Dickerson and welcome to my YouTube channel. I want to talk about UK interest rates, the Bank of England rate, and why Andrew Bailey, the governor of the Bank of England, has been doing a lot of interviews this week. And he's hinted in those that for the first time in a long time, the UK might not follow the Federal Reserve, and that's the American central bank. And they might drop interest rates prior to the Federal Reserve doing it, which is an unprecedented move. And that's potentially good news for those that have property in the UK. So I want to go into more detail on what's been said, where we're at with inflation, where we might end up very, very soon with that, and much more. So if you haven't done already, do subscribe to the channel over there and hit the bell notification. We've got new content every single day on this channel. And while you're here, smash the like button, tickle the like button, do something to that like button. We want to get more eyeballs on the content. Hitting that like button does that. That really pushes it out to more people, and I appreciate you doing that. So take a moment to do that for me now. So what's going on? Well, it's interesting. Andrew Bailey is the governor of the Bank of England. And nearly every meeting that the Bank of England have, they don't like to talk about when they will drop interest rates. It's very different to the Americans. The Americans were very confident. They were saying 4, 5, 6 interest rate drops at one stage in their meetings after the Federal Reserve did their monthly meetings. And that effectively may backfire on them now. So the Bank of England is usually tight-lipped on this. But Andrew Bailey's been out in the media this week. He's been having a number of interviews, especially in New York. And he's saying that for the first time in a long time, we might not follow the Fed. That's the line that normally happens. Whatever the Federal Reserve do, we normally copy them at some stage or fairly soon thereafter. And that's because our currencies are fairly intertwined. But what's happening at the moment is inflation in the US is sticky. And they got their inflation down faster than us initially. About a year ago, they got it down to, last summer, they got it down to around 3%. And that was in June of 2023, just checking my notes here. And so they got it down to around 3.5% in June. But it's stuck there, right? And so their inflation just isn't moving. Whereas ours has been very different. We had high inflation, higher than theirs, but we've been on a downward trend. Really, for the last few months, it's been moving in the right direction. We've had a few blips, haven't we? We've had a month or so where it just stayed exactly the same. We've had this month where it didn't go down as much, but it is going down. And that's the difference between the UK and America at the moment, is the fact that their inflation is just sticking for 9 months or so now, whereas ours is moving down in the right direction. And so we're not as intertwined, our economies, they're saying, as previously expected. Now, what's also interesting is the UK is expected to get very close to that 2% target next month. And Andrew Bailey's been talking that up a lot over the last week. He's saying that our inflation data will surprise a few people in April because it's going to be actually quite good. So it's the April data that would get in May, for example. And that's because the energy price cap has gone down 15%. You might have had a letter yourself. My partner, Katie, we got a letter this week, and for a first time in a long time, we got a letter saying something's going to be cheaper. Sure, you haven't had one of those for a while, right? And so our energy costs, I don't know if it's gas and electric or just electric or just gas, I'm not sure. But we were paying £300 a month on a direct debit, and that is going down to £220 a month. That's a big drop. 80 quid extra a month is going to help out. Lots of households, I'm sure everyone that lives near us will have had a similar bill, right? And so you might have had something similar too. And that is what is really expected to drive down inflation. Now, why that's good is because let's just think about your local business, the corner shop that you buy from that's got all those fridges and freezers. If their energy bill goes down by 15%, that's going to be a markedly huge number to them. Think of factories in the UK, transportation, all of this stuff moving in the right direction is really, really important. What's also good is we've got a good energy reserve. We didn't use as much gas, the UK, as we normally do in the winter. And because of that, our energy reserves are full up with the cheaper gas at the moment. So we've got something like 57% full at the moment, and we want to get it to 90%. But they're saying we might get it to 95% full with cheaper gas this winter, which would be a really, really positive thing. So even if the energy market gets volatile, we've already got 57% full. We've just got to get that extra 30, 40% in, and they'll pick the right time to buy that at the right cost, hopefully, and that will make a big, big difference. So what the Andrew Bailey is saying is, look, if America is just going to be stuck at 3.5% inflation, but we've dropped to 2%, then we're not going to wait for the Federal Reserve to drop their interest rates. We will actually go ahead of them, which will be a great, great pressure relief for a lot of people that have got mortgages and stuff like that. So that's the main thing here. And the other thing is that one of the other reasons we might drop a little earlier is in America, a lot of people have 30-year mortgages. So let's just say you live in New York, you got your property 2 years ago, then you fix that in at an ultra low rate. So you're not hit by these interest rate rises nearly as much as someone in the UK. In the UK, we change our mortgages every 2 to 5 years. Now, there are 30-year products. There are 20-year products. But most people don't use those. Brokers don't push those on us at all because they want to see us coming back every 2 to 5 years. And so Americans aren't feeling the pain of these higher interest rates as much as British people. We've got 1.5 million people this year in 2024 that still will be coming off a low interest rate going on to one of these higher interest rates. Some of them will see their payments double, especially if they're a buy-to-let landlord. It could be quite brutal for them. And so that's another reason that the Bank of England might drop rates a little sooner, because we are a totally different type of mortgage product based economy, and that will make a big, big difference. So that's positive news. It's not often that the Bank of England will talk about stuff like that. I talked yesterday in yesterday's video, which I just filmed, hence wearing the same clothes. You'll see that in that, I talked about lenders actually are putting their rates up with the uncertainty on inflation. Until the inflation drops officially, they won't move their rates down. But this is a good indicator. If the Bank of England are talking about dropping rates before the Fed, that is very, very positive news in my eyes. So do subscribe to the channel so you get all the updates on what's going on in the property market. Do like the video. Do comment below with what you think about this. Maybe share this video with a friend or family member, and go and check some more content on my channel, including this video right here.